perspective, 3 minutes each. I'll try my best to ensure that we keep time so that we're out of here by 11:30. And I do trust that my panel members will do the same. So Timo, let's hand over to you, and then Ruba, you'll follow.
Thank you. Very good morning, everybody. I see it's been a long evening last night, if I look at the amount of participants this morning. I was already amazed. We're talking about best practices, and H2 Global is sitting here. We haven't even started yet. So guys, this is a little bit sort of also the background. We're in an infant stage here with the development of a hydrogen economy. And it already tells a lot of an idea of a concept of H2 Global, which is about to start more or less as we speak, is already seen as a best practice. I think a lot has been talking about how can we stipulate the offtake and how can we stipulate the development of the hydrogen economy. And just this morning, we had a lengthy discussion also with the developer that offtake is, at the end of the day, the essential key. We need to allow hydrogen projects, whether it's hydrogen or derivatives, to come over that state where they're dependent on grant funding, where we really get them into an investment case. And that is where H2 Global, for those of you who don't know what H2 Global is, it's a market ramp-up mechanism set up by the German government to install an intermediary between the supply and the demand side that ensures offtake, secured offtake with a price certainty, market certainty, and legal regulatory certainty to absorb all that risks that are needed to create that business case today. And there's also, I see Norfund is sitting here, there's ample of funding out there waiting to be injected into that hydrogen economy yet to come. But we need de-risking. We need de-risking on a project level through offtake agreements like H2 Global and hopefully other instruments following. We need de-risking on a portfolio level with structured investment vehicles, for example, that need to be set up to allow with blended finance mechanisms to use the scarcity of public funding at the best method to go forward and allow private sector investment, institutional investors to come into the game. And we need, you know, grant funding to be utilized, especially in emerging markets and economies, to allow projects to be developed to that stage that they can really pitch under projects like H2 Global, for example.
So true. Thanks for that. You know, when we attend such conferences and within the introduction, someone says there's ample funding. I can just imagine how eyes open up. So thanks for that, Timo. Ariba, let me give you your 3 minutes for your opening.
Hi. Yes. Good morning, everyone. As the only rose amongst the thorns here, I hope I get.
Apologize.
I hope I get an extra 1 minute before you shut me out.
I'll give you 2.
But I think someone said it yesterday in one of the DFI panels around financing. What we're doing here is building a new industry, and in that context, adding to what Tim said. We haven't done this before, so to speak about, you know, sustainability and how do we get it to work, I think, you know, we need to maybe pace ourselves a little bit. This is, you know, let's take steps. And the first step here is how do we manage demand and supply? And the answer to that is we've done this before. We have built new industries before. We've just done REAP over the last decade or so in South Africa, and in Europe and other countries, new industries are being built as well. And so what we need to think about is really in building a new industry, there'll always be this chicken and egg story. And I hope in this panel today we discuss obviously, you know, the funding mechanisms, but more really the risk-sharing mechanisms, which I believe some of us here on this panel and amongst the audience might know particularly well, and will be able to share knowledge around how do we develop a new industry. What we need to do is, it's the chicken and the egg. I don't know which one comes first, but one of them needs to come, and hopefully solutions to which one come up in this panel.
Thank you so much. And I think that's the essence of this panel, right? It's about concrete solutions, it's about best practices that we're able to share. And who better to ask than Cecil? So Sureshan, please, let me give you your 3 minutes.
No, thank you, Tebogo. So I laughed when you said, how do we build a hydrogen economy? Because I think we must be clear and say, how do we build a green hydrogen economy? Because, you know, where we come from, we've been dealing with hydrogen for the last 7 decades now. And for those of you who don't know, Sasol and in South Africa, we're one of the largest hydrogen producers globally. We in our plants in Sasolburg and Secunda, we produce about 2.5 million tons of grey hydrogen. So the challenge is then, how do you build on that base, right? Because we've got decades and decades of experience of producing hydrogen, transporting hydrogen safely, managing it, converting it into derivatives like synthetic fuels and chemicals, making ammonia, making methanol. So we have the experience, right? The trick is now, how do we build on that and then start making the sustainable products of the future? And I think South Africa has got a lot to offer in terms of our natural endowments, the renewable advantage, and then the technical skills, because we've been there, we've done it before. Now, how do we position ourselves and transfer those lessons to the rest of the world? So that's really what I'm looking forward to share and discuss this morning, to build on the heritage that we have, the experience that we have, and then translate those best practices to the rest of industry, but also the rest of the globe.
Thank you so much, Sudarshan. Alco, let me hand over to you.
Yeah, thanks very much. I was yesterday very much impressed by your African dream and how to realize that dream. And I hope that we can help a little bit today to make that a reality. From my perspective, I'm from far away from the Netherlands, from the northwestern part of Europe. And basically, what we do regarding hydrogen is two things. One, we try to create a liquid market. And a liquid market means that you always can bring your hydrogen there. That is most important, because only in liquid market, liquid global markets, you can sell your hydrogen in the end. And how do we do that? Well, we simply do that by investing a lot of money. Our company, together with the Dutch government, we are investing 2 billion euros into the pipeline system in the Netherlands and to storage systems for hydrogen. And it simply means, in the end, that we have a 1,000 kilometer pipeline system in the Netherlands in 4 years' time from now, that opens up all industrial markets in the Netherlands to the global hydrogen economy. That is, I think, how the other end of the value chain can help South Africa getting into the full value chain. That's the one thing. The other thing is, and that's maybe an example for South Africa as well, in the northwestern Europe, we also will produce our own hydrogen, of course, especially based on offshore wind farms. And how do you organize that? It's the same like here. How do we do that with projects? And there we have decided that we will start with infrastructure. So again, we will make a connecting pipeline on the bottom of the sea, and then we link later on, one by one, all the projects to that pipeline. That enables also projects to be de-risked, and you're quite sure as a project developer that your hydrogen can go somewhere. So for us, the perspective is always creating liquid markets and let infrastructure do the first job. And we hope that we also can bring that experience to South Africa. We think it's most important to have that here on the coastline, Namibia, South Africa. And when you have your infrastructure here, we have our infrastructure there, so to say. Then the missing link, of course, is port to port and ships. And I think, well, there, South Africa is well positioned, what we have seen yesterday, or the day before yesterday. And the Netherlands and Germany are also very well positioned with our huge harbors. So I think we can manage.
Thanks, Alco. Mark, let's just give you to do your opening remarks.
So we've heard about markets, supply, transport. I'm going to try to bring a little bit of clarity on the off-taker side. So who's buying all of this stuff that we're producing, and what does the situation look like for them? We Systemic spent a lot of time on this. We also recently completed a study with GIZ and BMZ mapping off-takers in South Africa and Namibia, as well as up in Germany with respect to products moving up. I think, I'm looking forward to getting into some of the key insights, but just some of the questions and headline framing. I think we all have a reasonably clear picture of kind of even the 2030, 2035 scenario once prices have come down, once we're through that first wave of projects, and what the green premium might, have compressed to by that time, and how we can cover that with carbon taxes, or where there might not even be a green premium anymore. But I think there's a tougher question today, which is in advance of some of these regulations, while costs are still higher, who are the potential buyers who might be willing to move today? What are the challenges that they face? And how can some of these things like sharing risk help us get through that to get that first wave of projects happening? Because without that first wave, we don't get the cost decline and we don't get to that 2030, 2035 picture that we all kind of see as our target. And then the second thing that I'm keen to get into is South Africa's competitive position in serving these markets, right? So when it comes to resource potential, position in the globe, capabilities, et cetera, I think there are some strong advantages, and those point to some degree to which sectors South Africa might think about focusing on early on.
Thank you so much. So I just want to build on the point that you're raising, and maybe just to take off that, and I mean, I'm going to ask this to Timo. I mean, H2 Global is one of the world's leading contracting for difference mechanism for green H2 and derivatives. And I think what some of us might be asking in the room is, what are the lessons that have been learned through the rollout of H2 Global tendering process in particular?
Well, the lessons learned is really that maybe you got to start somewhere. There's so many, let's say, different challenges that you're facing in the market. Infrastructure, as we just mentioned, we need to get that right. Otherwise, it doesn't help if the ships or if the ammonia or methanol or hydrogen is being produced green, but if we can't ship it or we can't transport it, we need to get that right. We need to get the logistics right, but we need to start somewhere. And also, you need to bring in the private sector and the public side. I think this is very important. I think in the past, too many concepts and support programs have been designed without really consultating with the private sector. Is this actually what serves your needs? Is that what you guys need to take that step from MOU to FID? We did that very, very intensively because with H2 Global, when I designed HINCO, that is that intermediary that is really purchasing and selling and getting the CFD scheme, I thought HINCO should be a public entity, and the government made it very clear right from the beginning. No, we want the private sector to run. It makes things, and that's also one of the lessons learned, far more complicated, because how do you set up a scheme managed by the private sector, drawing public funding? It also, we realized that regulatory environments in Germany, for example, that kept us weeks, months, giving us headaches in regards to acknowledgement of non-for-profit status, all these things that really drag things along. That's also one of the lessons learned. We don't have the time for that, let's say, administrative, regulatory ping pong. If we want to reach 2030, 2040, 2050, we need to start today. But I really believe we need a strong collaboration between the private sector and the public sector, because my understanding, in many cases, the private sector is ready. They want to switch to green. They just need that environment to do that step, to have level playing field. If they're the first movers, they're going to lose out, because you guys, you're on the stock exchange. If you're making a loss but you're green, then your investors will go mad at you. We need a level playing field, and we need that rather sooner than later, but we need really the collaboration between the private and the public sector.
And I guess that's what we've been seeing, and the essence of this summit is a huge call of, yes, government taking the lead in the form of what ISA has done in South Africa, but for us to be able to speak in one voice, right? We can have many voices, but the same message that is coming out around what we want to do there. Thank you so much. Riba, I just want to ask, maybe from your perspective as a development finance institution active in the renewable energy and green hydrogen sector, how could one make projects to be more bankable, without secured off-takers?
I think the straightforward answer to that is you can't. But really, I think there are nuances and ways to that answer. And the first one would be, as I said, this is a new industry. So in order to build a new industry, you really need to think about, if you're thinking about bankability, you're thinking about, as a financier, you're thinking about, will I get paid? And the thing that gets me paid is revenue. And revenue needs somebody to take the product. So that's the link, right? And so we're thinking about how do we ensure that there's someone at the end, once we've built this green hydrogen project, so that will take the offtakes, whatever the offtake is. And how is that person going to be tied in for the long term? And I think one of the key things that's come out as we've been having these discussions and as we've been speaking is maybe we don't need to have the offtake as long-term. Maybe we need to build in some flexibility to it. That's just one, right? And then the second thing is around risk-sharing mechanism. Entities or instruments such as guarantees, entities like export credit agencies, entities like ourselves as DFI have in our toolbox instruments that we can use to de-risk, to say to the financial institutions financing, listen, you need secured revenue from these projects, and the people buying aren't really sure because we are still starting this industry. So this is what will happen. We will cover you for X amount that you can't get from the project or that you can't get in terms of revenue. And those are some of the tools that ourselves as DFI, along with other partner DFIs, can bring to the table. But also the thinking outside of the box, I think we really need to think about flexibility in terms of the PPA. We need to think about the cost. The most important thing about risk-sharing mechanisms, and we've seen this in an African context, is that they must be cost-effective. It doesn't help to have fancy guarantees and fancy mechanisms that add to the project costs. As we've discussed, I think in these forums, the cost of green hydrogen as it stands is prohibitive, and one of the big drivers of that is the cost of funding these projects. And so we need to ensure that the risk mechanisms and the risk-sharing tools that we are bringing are concessional and that they are cost-effective for these projects. So thinking around some of that, I think would really be helpful. I think just to add off, another thing that I think would be important is to also establish a local demand. Players like Sasol, big industrial players, have demand for green hydrogen. We can use that as the initial offtakes. I think let's take baby steps. Before we export all these million tons, can we prove concept that a Sasol or a big industrial steel player can take the green hydrogen and use that as our initial offtakes and then build on that?
So Suresh, before I bring you in, I really want to bring Mark in on this point. Informed by what Ruba is saying, man, what are some of the lessons that you think can be learned from offtake potentials, particularly when we think of ammonia business cases in Southern Africa, in Brazil, in Germany? What are some of the points that you'd want to raise in relation to the lessons that can be learned?
Yeah, so let me start with the sectors to paint a bit of a picture of what this looks like for the individual sectors, and then come to the kind of South Africa overlay of how they can serve those sectors. Because this is really, we should be thinking about this through a sector lens. That's the most kind of consistent patterns is how individual players in different sectors see their respective offtake. And then within sectors, I would also say there are differences between players, and generally speaking, the larger ones are a little bit more willing to take steps early because they see this as strategic. They have a little bit more flex on their balance sheet to be able to take these steps. So I'm just going to run through kind of 4 priority sectors. There's a bit more than this, but let me just run quickly. So fertilizer. So this is one of the biggest uses of ammonia today. Therefore, it's a prime candidate for early offtake of green ammonia, right? It's drop-in, so it's straightforward. The fertilizer manufacturers don't need to change anything on their end. And there's a smaller green premium already today than there is in some of the other sectors. But the challenge is, different from some of these other products, it's harder for them to pass on that cost down the value chain, right? So like in steel, for example, there are some end customers who will pay a premium for green steel. It's harder to get there in fertilizer, to find who's going to pay my green premium. In shipping, so this is either going to be ammonia or methanol, and that's still a bit of a hot debate, and some players are going a little bit more ammonia. Others are going a little bit more methanol. You know, Maersk has ordered some methanol ships. Trafigura, I think, is going pretty hard ammonia. So this is also ammonia, but again, different from fertilizer. They need to invest in infrastructure to make this possible, right? So bunkering facilities. So it's not just about what's the price difference on the product. They also need support in some of those infrastructure investments to make this supply chain possible. On the contracting side, I would say, again, you know, to bring this back to the H2 Global stuff, for example, these shipping guys, they're not used to carrying fuel price risk. Right? So you speak to them and they say, look, the world today, we just buy fuel whenever we need it, and if the price goes up, it goes up for all of our competitors as well, and we can all pass that through to our customers. If we lock into a 15-year fuel supply deal, that creates considerable risk for us, and we now need to manage that fuel price risk, and we can't get hedging products that cover 15 years. So that's essentially kind of their challenge. And then just back to the structural elements, green corridors are a big way for how this sector can develop. So South Africa should be thinking about, you know, a Durban, Cape Town up to Europe potential green corridor. And the reason that helps is because you can bring a lot of the players, so the shipping companies, the companies who are putting product on the ship and might be willing to pay for kind of clean shipping services, you can bring a lot of that together. So quickly, two more. Aviation, also a drop-in fuel, so it makes things a little bit easier. The green premium is massive. And there are other ways to get sustainable aviation fuel, which is bio, SAF, but there's some caps on that, and we really need book and claim to be able to make this possible, because there are some customers who will commit to certain volumes, but they will go where the incentives are, right? So if they are incentivized under EU mandate of 5% blending mandate, right now they can only address that within the EU. If there's a book and claim system, then they could maybe refuel planes in South Africa and count that towards their 5% in the EU.
So Mark, I just want you to hold it there. And the reason why I want you to hold it there, I know you've got a fourth one, but I know that, Suresh, in terms of Sasol, we all know, and it's been quite well put out throughout the many sessions we've had in this conference, that Sasol produces sustainable aviation fuel, which is the third point that I think we're getting to from your Secunda operation. But I mean, the real question that many people have is that how price competitive will the sustainable aviation fuel be as compared to that which is made through fossil fuel?
That's a great question. So Timo, I'm going to unduly influence you now, right? Because exactly what we need is market mechanisms like H2 Global. You know, as you said, Mark, the price support is really where we want to target, because you know that initially, as hydrogen costs are high, you have to target these premiums, right? Hydrogen costs will come down over time, but initially you will need this price support, and you have to go for the products that attract and command a premium. And we think sustainable aviation fuel is going to be the first one, and we can move quickly. Now your question is, how quickly can we move, and what's the advantage that we have? And why are we so excited about Secunda, South Africa? And there are really three elements that I want to touch on, right? The first is the technical element, then the business, and lastly the social element. So from a technical perspective, we've been converting coal or carbon from coal and natural gas, mixing it with grey hydrogen in our Fischer-Tropsch process, and producing these synthetic fuels and chemicals. And we're one of the first companies to have synthetic jet fuel certified. We've got it certified by the airline industry. We've done tests with the customers, engine manufacturers, the airlines, for a 50% blend. We've also done 100% synthetic jet fuel flight. So we're ready to go with synthetic jet fuel. Now, when you make synthetic jet fuel, it doesn't matter where you get the carbon and hydrogen from. So whether you get it from coal or gas, or you get it from a sustainable carbon source and green hydrogen, it's exactly the same, and we are ready to make it, right? So we've got the technology, the process ready to go. So in Secunda, what we are moving towards is then, how do I now back out the coal and natural gas and bring in the sustainable carbon and hydrogen? And that really is why we think we can do it quicker than anyone else. So technically, we think we've got that box ticked, right? Now we need to put the electrolyzer down so we can start bringing that green hydrogen into the plant. And as soon as we have comfort that we have a market and we have a secure offtake, then we can take that investment decision. The second element is the business decision, right? We think, I've explained why we think we can move quicker, but with the installed capacity, so we've got the Fischer-Tropsch reactors, we've got the refinery, we've got all the storage tanks, the logistic chains. We therefore think we can be one of the most price competitive producers of sustainable aviation fuel, because the modifications that we require, we're not starting from a greenfield site with nothing there. You have to bring the transmission infrastructure, the logistics infrastructure, start from scratch. We are taking a machine that already makes synthetic products. All we're doing is we're converting the feedstock. So from a business case, Timo, I won't give you the price now, but we believe it's going to be very attractive, right? Because we've already got half the equipment installed. But the last element, and this is really, in my mind, one of the most important elements, is the social commitment that we have. Because we talk about the just transition and not leaving anyone behind. If you look at a town like Secunda or Sasolburg, with, we've got 20,000 direct employees, but that community, 400,000 indirect employees, those towns do not exist without a Sasol or a Eskom being present. And we really have a responsibility to say, how do we then repurpose these assets? How do we take these communities behind? We've got a skilled workforce there that have been making petrochemicals for decades. How do we then take that workforce and use them to make the fuels and the chemicals that the world is going to demand in the future? And this is where we see the real opportunity. So to not just reuse the steel and the hard assets in the ground, but to take the people and the communities that we have and take them along and position them to participate in this green economy in the future. So if you look at it, technically we're there. We think we've got a solid business case. And if you then combine South Africa's social advantage, because I don't think it's a challenge, we really think we're well positioned to be one of the global leaders in SAF production. And Mark, you ended off by talking about book and claim, and I know we'll go there. Yeah. But we really think there's an opportunity to position OR Tambo as a global SAF hub for the world.
Yeah, no, definitely. We'll get back to the book and claim. And I mean, it is it's exciting, but at the same time, there is levels of anxiety, and we can't dismiss those anxieties about ensuring that we leave no one behind, right? The value chains that are involved, not just necessarily looking just at the plant in Secunda, but the value chains around it. And I guess maybe this is an opportune time maybe to bring in Olko, just to say, is blending of green hydrogen possible in the current Khasuna infrastructure? And if so, what level of blending would be possible without major infrastructure upgrades, And I think that's a lesson maybe that you can share with us.
Yeah, again, we are a bit lucky, I must say. We are a bit lucky in the Netherlands and in Germany, and that is because we have all that natural gas infrastructure from the last decades. And it's quite easy to transition from natural gas to hydrogen. Basically, we have already done that. We have already our natural gas pipelines. We have retrofitted them and changed them into hydrogen. So we have proven in practice that it works. And our bigger advantage is that when we have our corridors, and you're talking about a corridor here, we have our corridors. And in those corridors, we have 5, 6, 7 pipelines. So it's easy. You just take out one pipeline out of the natural gas system, you convert it to hydrogen, and you have your hydrogen system. So what I said in the beginning, we have made our decision, our investment decision, to bring 2 billion euros to the hydrogen infrastructure. And in that investment, 85% consists of traditional natural gas pipeline that we just convert to hydrogen. And then we need, of course, a couple of connections with new systems. But basically, we can use the old system. So it's easy, and we don't have to blend. That's the other advantage, because we have that separate pipeline system. So we can have the pure green hydrogen going across the country, going to Germany, going to Belgium, and bring that to the industrial customers. When you blend, then you have a blend, and you have to de-blend, so to say, in the end. But we can do that in one go. I'd like to add a little bit to what Timo was saying about, let's say, the cooperation from public and private sector, because I think that is most important. We hardly understand how immense this transition to green hydrogen is. And because it is so immense, it means that public and private have to work together. And the public sector should help, let's say, in systems on regulation, permitting, and so on. The public sector should help what Timo is doing with mechanisms like H2 Global. The public sector should help by creating and organizing that infrastructure. And the private sector basically is on both ends of the value chain. On the starting point, solar, wind, electrolyzer coming to green hydrogen, and in South Africa and the other parts of the world, downstream, the industrial customers, the aviation, and so on. So we have to bring, as a public sector, both ends of the value chain together. And that is the great and wonderful chicken and egg, maybe a chicken and a chicken, we have to solve.
I think Mark wanted to just come in before.
Yeah, I just wanted to share one point that might not be clear to everybody. So we're talking a lot about the movement of hydrogen and hydrogen products produced in South Africa and moved up to Europe, where there is a market to pay for the green premium, right? But there are two different, you can separate the hydrogen industry into two different sides, right? So one is sectors that will use hydrogen as a gas. So this is like trucking, industrial heating, refineries, for example. And then the other is sectors that will use hydrogen to produce a product, and that product can be moved around the world, right? So this is ammonia, synfuel, methanol, steel. These things, when you produce them with green hydrogen, as could be done in South Africa, and then transport them, the cost of that transport adds very little and to the delivered cost. And so the fact that South Africa has incredible solar and wind resource and can produce hydrogen more cheaply than Europe can plays well into those products, right? So you use the hydrogen, produce another product, and then that product can be moved and transported at low cost. That is not nearly the case in the case of hydrogen gas. So if you produce hydrogen gas here, compress it, liquefy it, turn it into ammonia, move it up, and then revert it back into hydrogen gas, you've eroded a lot of the cost advantage that you had relative to producing that hydrogen gas in Europe in the first place. And it may be that we end up in a situation in the future where, because Europe doesn't have enough resource potential to serve its own energy needs, that happens anyways. But I just want to be clear, there's a very different story in terms of the cost competitive advantage of producing in South Africa for these products versus these hydrogen products versus delivering hydrogen as a gas. But
Thanks. So I'm a devout Christian, but we're not going to have a situation where this is a sermon and we are just preaching and we don't allow people to be able to interact. So I'm going to ask that I'm going to bring Riba in, and then immediately after that, I really want to take some questions from the audience. So those who've got questions, if you could kindly just prepare them, and then I'm going to take a round of hands before I take the closing remarks from our panel members. I think one part that hasn't come out so pronounced in the conversation, and as the rose among thorns, I'm hoping you'll assist us, is the role that export credit agencies have in de-risking some of these projects. And I just wanted to find out what's your view on that, Riba. What can be done in relation to de-risking some of these projects?
I think I touched on it briefly, but yeah, export credit agencies can play a role in de-risking these projects. But I think traditionally what we've seen in traditional infrastructure projects is that the costs associated with that tends to increase the overall cost of financing for the projects. So I believe that export credit agencies could be an important agent in this space, but the costs associated with them, I think, needs to be evaluated in relation to the overall project. So yeah, and another thing that I was thinking about as you were talking about, I think that was an important distinction, what exactly we're transporting. In terms of, you know, is it a solid hydrogen, is it liquid, is it gas? Yes, the gas element doesn't make sense. But I think it's important also in an African context to think about demand on the continent as well. Things like fertilizer. I think the current geopolitical environment has highlighted some of the food security issues on the continent. So export credit agencies could think about regional, continental demand for end products such as fertilizer as an initial offtake. I do think in some of these conversations we tend to think big picture and we lose, you know, the real, what I call low-hanging fruit, and fertilizers and products like fertilizers is probably one that I think we should really hone on and try explore a little bit more as a continent.
Mark agrees with you. Wants to jump in, yeah?
Just to support that point, South Africa uses more fertilizer than it produces domestically. It imports a bunch. There's, you know, somebody's going to have to pay the green premium because there still is one today. So, you would have to find who's going to support that locally. But it will get to a point where it's cost effective and makes sense. And so it does make sense to pursue that track. And then just to say, in terms of the opportunities locally, I think that there's obviously the export element we've talked about. There's also multinationals who have made net zero commitments, who have significant operations in South Africa, right? And these, again, are from the same sectors, aviation, et cetera. I think would be the other kind of early opportunity.
Srishan, you want to comment?
I just wanted to add, because I fully support what you're saying. And I do think, though, that the export of hydrogen is not what we should be targeting in the long term, right? Because you don't want to be the exporting energy, right? It's going back to you know, the Africa of old, where we just export minerals for beneficiation elsewhere. The opportunity for us is then, how do we create those hydrogen derivatives in South Africa? How do we create those use cases in Africa? And really what we've done is then prioritized a couple of use cases, starting with sustainable aviation fuel. But then you would have seen our partnership with EMSA looking at green steel as well, because we really see that as an opportunity. You know, why should we be exporting ammonia to be cracked somewhere else and then to make green steel? Just makes no sense, right? And then the other use cases, products like ammonia, methanol, which can be used locally, and also if, you know, as you said, initially there will be a premium required, right? So initially the focus will be how do we get those premiums, and if that's the export market, then that's where we'll go to, right? But ultimately we've got to look at decarbonizing the country, and we'll do that by through local use of these green hydrogen derivatives.
Thank you so much. Timo, you want to put up your hand?
Maybe also to add on that, I think South Africa, or Southern Africa, has got quite a distinguished advantage compared to other regions of the world, because you have that local offtake, you have that local demand here in your country, in your region. And that makes a huge difference. Maybe it makes sense to kickstart through export, because there is an instrument like H3 Global paying for that CFD. But in the medium long term, I think it should be a mix of local offtake, local production also, what you just said. That's a huge political debate I see coming up in Europe. Will our steel industry be ending up in South Africa and Australia and Chile? I don't know, but that's political discussion. And also the transition of the local economy. And I think that is a very, very important advantage of Southern Africa. Also, when I look to Namibia with South Africa in the backyard, that is one of the competitive advantages to many other regions in the world where they're just looking at export. So you got also a huge dependency. And then I wanted to add on one of your elements that you mentioned, liquidity is important. I think this is key. We also need to get away from those purely point-to-point, big-scale, large contracts where when a steel manufacturer takes a 15, 20-year long offtake agreement, we need that liquidity to transform the market, the offtake, to get the medium-sized companies in Europe, in South Africa, utilizing ammonia, utilizing hydrogen to take that switch. They need to have the the security that there will always be supply for those green products. And that is very important. We need pricing signals. That's what we're trying to create with H2 Global. Pricing signals on the demand side, on the supply side. Without that, it's very difficult to create that liquid market.
Thank you so much. So I'm going to open up for hands. I'm going to check if there's any hands in the room that would like to ask pointed questions. So if you can just let me walk around. We'll start by just saying what your name is, where you're from, who your pointed question is to. Thank you.
Thank you very much. Thank you to all the panelists. I'm Celeste. I'm from a firm called Meridian Economics. And I had a quick question just around this green premium issue and whether, I know there've sort of been rumbles about this, if there's a carbon offsetting or a carbon trading element to making that green premium or being able to close that green premium gap and stimulating local demand of the greener products. So, i.e. producing sustainable aviation fuels here, using them in our current fleet, but having that green premium sort of offset by European countries or those where the green premium is a bit more palatable. Just any of your thoughts on that would be very useful. Thanks.
Thank you. Is there another question before we? Okay. Mark, there's another question here. If we can start off by your name, organization again, and then I'll give it back to the panel.
Hi, my name is Andre Truta. I'm the mayor of Saldanha Bay. My question is to the gentleman from Sasol. You've signed very excitingly the MOU with ArcelorMittal, and we're ecstatic to hear that. Maybe you can just elaborate what is your plans in Saldanha? Is it purely to make hydrogen? Are you trying to set up, which is in my mind, building a plant there, and then you have space to turn over? Maybe just elaborate a little bit on your plans for Saldanha Bay. I would appreciate that if at all possible. Thank you.
Thank you so much, Mayor. Mark, do you want to take the first question? You had put your hand up, I'm not sure. Any other panel member can also... Then let's start with the first question, and then we'll get to the second one, which was specifically for Sasol.
Yeah, I suspect Sasol can speak to the first one as well. But to answer your question, this was the reference to the book and claim system. So it's the idea is that you create this kind of associated product similar to in the US when they were doing renewables, they called it renewable energy credits. And the physical products can be separated from this kind of associated digital product. But that requires essentially two things. One is a book and claim system, and then the second is that within the regulatory environment where somebody is trying to claim that, so like under the EU ETS, for example, there's allowance for that. So yes, it can be done, but the regulation to enable what you described is not yet in place. But
Suresh, please do take and maybe just start off that one specifically on the book and claim system, and then we can go to the second question asked by the mayor.
I think so you're absolutely right. I think your second part was relating to decarbonization and claiming that offset credit and using that to almost subsidize the price mechanism. I think with the production of SAF, you have to be very careful in terms of only one person can take the credit for decarbonizing, right? And the person paying the premium is the person who wants the credit for decarbonizing. So if you're going to sell a sustainable fuel to an airline who wants to say, we've put in 5% SAF and therefore our footprint is 5% less, you have to then allocate that to them. So there are other mechanisms where we can look at carbon offsetting and how we can use that to almost provide price support. But initially, the way the rules have been written, I think we'll have to allocate that. That said, I don't think there's anything wrong because we decarbonize our Secunda operations. I mean, everyone knows we're the second largest emitter in the country, so it benefits us and it benefits the consumer. So the airline is also then flying on a decarbonized fuel. So it's a win-win, and the price support then helps us do the transition. So I think that's a really good all-round win for everyone. Coming to your question on Saldanha. So I'm glad Louis is here, all my colleagues. We really think there's a fantastic opportunity in Saldanha. I started by talking about using existing assets because that can accelerate the transition. So definitely green steel is the opportunity. You've got a plant with a mid-rex process that can be converted in almost no time to start producing this green steel, can take green hydrogen. It's one of the most advanced technologies in the world. But there's other advantages in Saldanha, right? You have a harbor, you're positioned for the export market. We could look at green ammonia, and we certainly are factoring that into our plans, green methanol, other sustainable products. And the thing is, once you've got a large offtake, it then opens up other use cases. So that could be a hub to supply the Western Cape with hydrogen. It could supply it with other sustainable products. So we certainly, our anchor demand will be, or focus will be with AMSA and looking at green steel. But with all the other natural advantages, and as you mentioned, the space there, we see the opportunity to then expand very quickly into other products, and we certainly will be considering. I mean, there's a bunker fuels opportunity that we will explore. So Saldanha offers tremendous opportunities from a geographical perspective, from the fact that it's already an industrial development zone. There's heavy haul roads, there's electrical infrastructure. So we certainly see the potential for more than just green steel in Saldanha, and that's why we're so excited. And that's why I'm sure you're also excited.
I guess that's why we're all excited. Thank you so much, Suresh. I just want to check one last time before I take closing remarks, if I have not missed any question, any hands. Okay, I know you, but I don't think everyone else does. So please, if you can stand up and...
Thank you. My name is Steven. I work for GIZ. Maybe more a layoff than a question, Timo. Could H2 Global also be adapted to South or Southern Africa? And if so, how do you see that playing out?
Absolutely. I think there are two ways. First of all, H2 Global is set up like a modular system. So at the moment, the first auction is a global auction. But we also have the opportunity, if the German government or the European Commission, for example, would like to set up a dedicated Africa or Sub-Saharan Africa window, what we call it, that there would be a dedicated auction for the import specifically out of Africa. That, for example, could stipulate especially the African projects that are on the ground. Because to be very honest, we have no idea who's going to be in the lead for that first global auction. Really open question. Is it Australia? Is it the Middle East? Is it South Africa, Namibia? Is it Chile, Brazil? Nobody really knows. When we really say, here's the money, that's the time frame, those are the requirements, who's running now? We really don't know. The other way is also looking into setting up a similar scheme, especially for the offtake within Southern Africa, for example. You could use the same mechanism within South Africa, within Southern Africa. Saying like H2 Global could be deployed also for the production and offtake within Europe. You could do something similar within Africa. So I think there is always the opportunity, and I would also recommend, I know in Latin America, there are already a number of countries that approached us whether they couldn't set up maybe a similar scheme within Latin America. Maybe also then, seeing that we get funding or they get funding from the GCF or from the World Bank. I think that's definitely an opportunity that South Africa or Southern Africa maybe look into.
Thank you so much, Timo. So we're going to just take the last closing remarks. Mark, I saw your hand was up, so we're going to start with you. I'm going to give each of the speakers just a minute each so that we wrap up and that we are out of here by 10:30 to allow for the break so that we can come back. So Mark, we're going to start with you. I know you wanted to just build on that, but also if you can just do your closing remark for this panel.
Yeah, okay, so I'll do that second because it's kind of a nice tie-in. One more further point, just speaking to South Africa specific, competitive advantage. So when you think about the countries that are similarly eyeing this opportunity, right? So the Namibias, Mauritanias, Australias, et cetera. South Africa has very good resource potential, so better than Australia, but maybe not quite as good as Namibia. But it has CO2, right? So some of these products, like synthetic jet fuel and e-methanol, which we didn't talk about that much, require a source of CO2. And somewhere off in the future, we're going to get that from direct air capture, and that'll be sustainable, but it'll probably start with industrial point source capture. And so that's, you know, to enable that, you need an industry that has CO2 emissions. Obviously, Sasol has plenty. And then over time, that can be phased out, right? So therefore, these products, synthetic jet fuel, e-methanol, in particular, South Africa has a good position to serve. To build on Timo's point and kind of provide a bit of an overall wrap in, this concept of a Africa-specific sleeve for African supply, I think makes a lot of sense. And the reason is, when we think about global suppliers, so again, back to kind of the landscape of all the countries that are eyeing this opportunity that have potential for low-cost supply. African countries, this is a bit of a generalization, obviously there's some distinctions, but have better resource than a lot of the other countries, so than like a Saudi Arabia or an Australia. Chile is pretty good. So the technical potential is better, but there's a bit of a challenge on cost of capital, and so it's nice to have the DFIs here. And given these are the vast majority of the investment in these projects is upfront capital, and so the cost of capital makes a massive difference. Just to give one example, on your cost of ammonia, if we're talking about, you know, trying to bring ammonia costs down from kind of north of 600 or 700 down to 500 or below, a 1% difference on cost of capital has a $30 per ton ammonia impact. So cost of capital is massive, right? And essentially, Africa needs a bit of its own track because it has this early slight disadvantage on cost of capital, even though the end state is it can be leading global player. So it's similar to, like in Europe, there were separate tracks created for offshore wind when it was more expensive, but the recognition was there that this could be a technology that should come down the cost curve. And so it had its own auctions, et cetera. So to me, that idea, Timo, makes a lot of sense.
Thank you so much, Mark. Elko, your closing remarks.
I would like to advocate a longer-term cooperation between Southern Africa and Western Europe. I think that is most important. And my understanding and my experience with auctions is that in the beginning it's very helpful because it drives efficiency. But longer term, there's more than just efficiency. And give you an example of the auctions we do right now in the Netherlands on the North Sea. There is no price incentive anymore because we don't need any subsidies. But the auctions are driven by what do the project developers, what do they contribute to innovation? What do they contribute to system integration? And those are longer term very important things. So when I was listening to you, I think South Africa should make the right combination of, let's say, developing the own economy here in South Africa and having manufacturing and having a good position on export. And exports, auctions can help and auctions will help, and Timo will work on that. But we must make sure that it's not just an auction and then another auction 6 or 7 years later. You must have long-term cooperation so that you can build together. And I think that is that's our message, that we should work together, and we must be successful because Africa, Southern Africa, has a great position to make a future on green hydrogen, but then we must do it in a very structured way, and basically we need a joint master plan for that.
Yeah, I mean, a consistent message. We don't have an opportunity to fail as a country, and who better to tell us than Sasol, who's leading us through this? Your closing remarks, Ray?
Yeah, I think it's good that we're ending off talking about partnerships because, you know, as you said, Riva, we're basically reinventing the industrial economy in South Africa. We are reimagining what South Africa could be. And you may have seen just before COP, the government released their JET IP plan, which outlined what would be required for us to reinvent South Africa's economy, transition to a green economy. And they estimated that something between 20 and $30 billion would be needed to be spent in this decade on the green hydrogen economy. That's a massive amount, right? We certainly will need partners from all over the world to be able to enable us to be successful. I think the message I want to leave you with is that, you know, you said chicken and egg and then chicken and chicken. We can't wait, right? So we are moving, but the risk is massive. You know, every time we move on a project like Buchubai or a Saldanha, these are mega projects. So that even just to do the pre-feasibility and feasibility work is hundreds of millions of rands and investment. In H2 Global, at risk, we've already started with the tie-ins and the modifications to the plant. But we need more of that partnership, that support, and I do think, I mean, you know, when you look at the support we've seen over the last 2 days, the partners are here, they're ready, they're willing. You know, as we've said, there's no shortage of capital, there's no shortage of partners, and now we need to bring it home, right? Because the interest from all over the globe is here. You can see the number of attendants from Korea to Japan to the African continent, all over Europe. The Americans are all here. Everyone sees the opportunity. Now we must. Now we need to bring it home and crystallize this and make this tangible for South Africa.
Thank you so much, Suresh. And I think it's really that. It's about what we've gathered here to do, not to just talk, but for the ability for us to collaborate, to form those partnerships so that it's substantive. It's not a talk show. It's about what's the next move from where we are. Riva, your closing remarks.
Yeah, I think I'll just build on the partnership leg. Really, as I said, we're building a new industry. But we've built new industries before. As South Africans, together with our partners as Africans, we've built industries before. So I don't think this challenge is, you know, too big for us. And as we think about what this entails, we've got, yes, challenges in, you know, the chicken and the egg. You can't build the facility if you don't have the offtake. You don't have the offtake if you don't build the facility. But we've shared here some of the mechanisms that we can use to de-risk some of the, you know, the revenue risks associated with not having long-term offtakes. And really, I think the message that I'll leave to everyone is around, there's a lot of enthusiasm, there's a lot of capital, and there are a lot of competent people working on these green hydrogen projects. We have the recipe. So let's bring it together. Let's start baking, and let's stop working in silos. I think one of the most important things when you think about building industries and you know, how to de-risk them, as a financier, I'm thinking about bankability. But as industrial partners or as country partners, you have other interests. But we all can find points of alignment. Let's work together collectively and get this off the ground.
Thank you so much. So it's really about points of convergence and seeing how we're able to then work together. Timo, I'll end with you from H2 Global. Your closing remarks.
Yeah, well, I think 2 years ago when we started H2 Global, we already said this is a huge opportunity for emerging markets, for Africa, because there's a new commodity coming up. Africa is so well positioned to become a major player here, to use that also to transform their own energy. So it's a double win situation. And I live in Germany. In Germany, I believe we will see delegations coming from Germany to South Africa to learn from you guys to understand what is load shedding. Because this is what we are facing at the moment. The winter is coming up, and this is a situation which is completely new to Europe, to Germany. So since February, since the Ukrainian war started, Europe, Germany in particular, is in a completely new position. We need new partners. We realize now we are in dire straits. We need to diversify. We need to get new partners. And I think hydrogen is an absolute opportunity at the right time. It's not the quick fix for the current problem, but in the medium long term, this is the opportunity. And that's a double opportunity for Africa to, you know, raise the hand and provide that opportunity to create new partnerships. So I think it's the right time, and that's where the Africa Dream that the singer yesterday mentioned might really come true.
Thank you so much. I really want to thank the panelists. I think the take-home message here is really about collaboration. It's about partnership. It's not a silver bullet. We know that it's not a silver bullet, but we're also confident that there's a lot of work that is being done. We've not just woken up and have started the work that we're doing with green hydrogen, and I think that's a general conversation that we're having. The challenges are there, but what we are definitely sure of is that we've got the brains in the room, we've got the commitment. It's about us working together and delivering on this. So I really want to thank the panel members, and I want to thank everyone in the room. Please do enjoy the tea, and we'll be coming back at 11 o'clock. I know there was a lot of mention about the chicken and egg. I hope that there is some level of breakfast there so that we are able not to debate chicken and egg, but to have a bit of chicken and egg. Thank you so much, ladies and gentlemen. Enjoy the rest of your day.
We would like to take this opportunity to thank the sponsors. The Green Hydrogen Summit South Africa 2022 Cape Town was sponsored by Sasol, Anglo American, Aqua Power, Industrial Development Corporation, the Northern Cape Province, Western Cape Government, and Westgrow, in partnership with the Republic of South Africa, German Corporation, Infrastructure South Africa, and the Digital Council.